Want to invest in real estate without buying a flat, dealing with tenants, or fixing leaky taps? What if you could own part of some of France's biggest property portfolios and get paid dividends regularly? That's what the SIIC, or Sociétés d'Investissement Immobiliers Cotées, is all about. Welcome back to the channel. Today, we're breaking down the SIIC, the French version of a REIT, Real Estate Investment Trust. We'll see how it works, how you can invest, the tax advantages, and the risks. By the end, you'll know exactly if this fits in your portfolio. Let's dive in. Before we dive into today's topic, please note that the information provided in this video is for educational purposes only. It is not financial, investment, or tax advice. You should always consult with a licensed professional before making any financial decisions based on this content. SIIC stands for Sociétés d'Investissement Immobiliers Cotées, which literally means Listed Real Estate Investment Company. It's a publicly traded company whose main business is owning and managing real estate, often on a very large scale: offices, shopping centers, logistics warehouses, hotels, even residential buildings. The key thing? SIICs are listed on the stock exchange, so you can buy and sell their shares like any other company. They operate under a special French tax regime inspired by REITs in the US. They don't pay corporate income tax on rental profits or capital gains, as long as they distribute most of their earnings to shareholders. SIICs are clearly investment products, not savings accounts. When you buy SIIC shares, you become a shareholder in a large, diversified real estate company. You receive dividends from rental income and profits. The share price can also go up if the value of the company's properties increases. Example: if you invest $5,000 in a SIIC focused on retail parks and offices, you might get a 4 to 6% dividend yield each year, plus any capital gains if the stock price rises. Why do investors love SIICs? Passive income. You collect dividends without managing a single tenant. Liquidity. You can buy or sell shares quickly on the stock market. Diversification. SIICs often own dozens or even hundreds of properties in different sectors and countries. Tax transparency. No corporate tax at the company level, so more profit gets passed to you. Low entry point. You can invest with a few €100 instead of hundreds of thousands for a whole property. It's one of the easiest ways to get exposure to real estate, with stock market flexibility. But like all investments, there are risks. Market volatility. SIIC share prices move with the stock market, not just property values. Sector dependence. If they're heavy on retail or offices, changes in demand can hurt results. Mandatory payouts. While it's great for income, it means less reinvestment for growth. Dividend taxation. Dividends are taxed like other investment income. So while SIICs give you real estate exposure, they can also be as volatile as any listed company. Investing in a SIIC is as easy as buying any stock. Open a brokerage account through your bank, an online broker, or a PEA, Plan d'épargne en actions, if eligible. Search for the SIIC you want. Examples include Unibail Rodamco Westfield, Gecina, SIIC, or Clépierre. Decide how many shares to buy and place your order. You can hold them in. A standard trading account, CTO. A PE for French and European SIICs, which can be very tax efficient. Because SIICs are listed, selling is easy. You just sell your shares through your broker at market price. There's no minimum holding period, but remember, if you sell quickly after a dividend payout, your capital may drop by the same amount. For tax efficiency, many investors hold SIICs in a PEA for at least 5 years. SIIC dividends are taxed like other investment income in France. In a CTO, they're subject to the flat tax, prélèvement forfaitaire unique, of 30%. That's 12.8% income tax, plus 17.2% social charges. In a PEA, after 5 years, withdrawals are free of income tax. You only pay social charges on gains. This is why many investors hold French SIICs inside a PEA whenever possible. Final thoughts. Please note that the information provided in this video is for educational purposes only. It is not financial, investment, or tax advice. You should always consult with a licensed professional before making any financial decisions based on this content. To sum up, SIICs are the French answer to REITs. They give you access to large-scale real estate portfolios. They pay regular dividends. They're easy to buy and sell on the stock market. They do carry stock market risk, but for many, they're the simplest way to invest in real estate without owning a property directly. Thanks for watching. If this video helped you understand SIICs, hit that like button, subscribe for more French finance tips, and let me know in the comments. Would you invest in a SIIC, or do you prefer bricks and mortar?